Wait and see. That seems to be the prevailing sentiment of investors right now. Hi, I'm Dean Jenkins of FollowMeTrades.com, and this is the market update for the week coming up of December 4th, 2016. And here we are at the end of the year. And, we had this big Trump bump, the market move up after the November 8th elections, and the market rallied a little bit, put in some new highs. Back around Thanksgiving week, we had 4 consecutive days that put in new highs for the S&P 500, but now we're pulling back just a little bit. There's a lot of information in the news right now. Employment was the big news today on Friday, December 2nd. And the employment report came out, 178,000 new jobs created. Thursday, the unemployment report came out, and unemployment is reaching a medium-term low. But the market is weighing that against the labor participation rate, which has steadily dropped from 2000 to today, and it had peaked at about 68% labor participation. We're around 62, 63% right now. So about 95 million, a full third of the country, not looking for work. And so, the idea is that the unemployment rate, which only counts people who are looking for work, is a little bit overstated, and that several people, and not just retired folks, but younger folks, have just checked out and aren't even looking for jobs. So it's a bit distorted. So although the headline numbers of employment and unemployment look pretty good, the real story isn't that great, and is one of kind of stagnant economic position. So I think the markets, and you can see it here on the chart, they're just going to wait and see. In addition to the jobs information, which is mixed at best, you've got oil prices, which spiked up dramatically this week on the basis of an OPEC announcement that they were going to cut back production. That should result in an increase in price. So supply-demand balance gets better. They cut back supply into existing demand. The price of oil should go up. But here's a really interesting comment from an OPEC member. So here's an article on Bloomberg from Ali Al-Nami, who says the OPEC deal could work, but we tend to cheat. And that's historically OPEC participants have agreed to production levels and then cheated, right? Serving their own interest rather than the interest of the entire cartel. So what does this all mean for the market? I think it means we're waiting. We're going to wait and see what happens. Now, probably the biggest news that's going to come out will be on December 14th when the Fed decides about interest rates. And in the face of better employment numbers, sort of, that may be the impetus for an interest rate increase. And it will certainly cause some drama. So in looking at technical analysis here, we've had this big run up, the Trump bump. A normal retracement just from an impulsive move like that would take us down to about 2165 to 2133. And so over the next few days or few weeks, we may work our way down here unless there's any new breaking unexpected news. But the real market mover, I think, is going to be December 14th when the FOMC, the Fed, makes their announcement about interest rates, and that could set the tone for the market. It could set a direction. So for now, we just have to wait and see what's going to happen, and be really, really careful in our trading, because there's not a real clear trend that we can just join and participate in at this time. So that's where we're at. It's an uncomfortable place. It's much more fun to trade when there's a clear trend, but there are sectors and individual stocks that have good trends, and that's what we're trading right now. Let's go ahead and take a look at gold and oil as we do each week and see what's going on there. Well, here's gold. It just continues down. And as we have said for a few months now, we thought gold was heading down, that we put in a high and is correcting. Now, from the impulsive move up earlier this year. It's retraced into a Fibonacci zone right here. So it could begin to head back up from here, and it will probably be tied to what the major indexes do. If they go down, gold could start back up. So we got a little early evidence of it here, but no proof yet. So we'll watch this really closely. So we're not trading gold at this time. We're just on the sidelines on gold, waiting for more evidence of what's going to happen. So here's oil, and of course, big jumps this week. A couple of days of really, really big moves. A couple of days ago, it was like 8%. That's a big move in a major commodity like oil, and it's continuing up. And this is all in that OPEC news that they're going to cooperate and cut production. So is that true, or will they cheat? We'll have to wait and see. A key level to watch on oil will be this previous high. If it takes this high out here at about 52.83, then there's a pretty good chance that we do have an uptrend and a continuation on into a big recovery in oil, and it could go up into the 60s to 80s. But let's see if it takes out this high. So oil, just like the indexes, we got to wait and see. And that's the update. Wish we had a clearer picture, but we don't, and we don't get to determine what the market does. We have to respond to the reality of what the market's actually doing. So that's the update for this week. Once things get clearer, we will be reporting it here. You'll hear it here first, and I look forward to giving that information. So be sure and stay tuned, and we'll give an update next week. Thanks. Bye.